Hi, I'm Deborah Price, founder and CEO of the Money Coaching Institute, and this is Conversations About Money. Today, I have the pleasure and honor, really, to be speaking with Matt Venturi of ClearingBid. And Matt is doing some really wonderful things in the financial services investment community by trying to create a more level playing field for IPOs. And Matt, as you know, I'm a former investment advisor, and I remember specifically what a source of irritation this was for me when I was an advisor, and especially I remember being at Merrill during the time that so many of the .com amazing companies were just coming to market, and repeatedly I couldn't get any allocations. In fact, really, if you weren't a top producer, you could never get any allocations. So the cherry picking and all of that was just something that was a big thorn in my side. So I'm thrilled to hear about what you're trying to do with ClearingBid. And I'd just love to hear more about, what was the point of inflection for you where you just decided it was time to change this? Please share with us.
Oh, thanks, Deborah. It's great to see you and have a chance to share some background and thoughts. I too started my career at Merrill Lynch. I was in New York, grew up in San Francisco, but went to New York to be in a corporate intern program where there were 17 of us that spent 2 months in each of the firm as a rotational program. And I went to NYU Business School at night while doing that. And I actually, believe it or not, did my graduate thesis on the role of the high net worth investor in the capital markets. So this is going way back. I mean, I've been on Wall Street for 4 decades, but it was really the concept of the family office at that time. And
Sure.
I was the intern in the intern program. Then I became a retail broker for about 2.5 years until I finished my MBA. And then I moved down to the corporate syndicate desk, pricing investment grade debt issues for a year. Then joined Smith Barney Investment Banking, 12 years there. Then set up my own boutique investment bank for a couple of years, and then ended up at a firm, Houlihan Lokey, Howard and Zukin, where I built up their investment banking efforts. And I'll give a little color on the origin of this. But back to your question. Spending time in the sell side, because there's sell side, buy side. Buy side's the institutional investor side, venture, private equity. Sell side is with Wall Street is the investment banking, sales and trading, research, institutional retail, and all those areas are like silos. Every single area in the sell side has kind of its own sort of objectives and client sort of priorities, and they're conflicting. There's conflicts throughout and among. And as I kind of went through this whole period, it was really frustrating. And ultimately, the total frustrating point was that the end investor, particularly a retail investor, is really left out in the dust. And the institutional investors are who are most attended to. And we can talk about this, but back to your point, I just felt that this inequity of how this whole process worked with companies going to the capital markets to raise money, there was a big constituency that was left out. And that was kind of the impetus to say, maybe there's a way to do this better.
Yeah, I mean, this really is one of the reasons the rich just keep getting richer. I mean, if they get all the investment opportunities, then of course that's just going to keep happening. And so tell us more about, from the standpoint of creating a more level playing field, what is your hope and the mission of ClearingBid?
Well, back to your observation there, Senator Chris Dodd, who was known for the Dodd-Frank Act, I've become close to Senator Dodd, and he believes this will bridge the wealth divide in America. And the way we're going to do this is really provide equal opportunity to all investors. And the way we do this is basically leveraging the existing pathways or existing infrastructure of how the secondary market works. If you have a self-directed account or a managed account, be able to buy shares of IBM on the New York Stock Exchange. We want to follow those same pathways to open the public up to the public investors, the IPO market, and be able to basically put orders in through your broker the same way you do a secondary market order.
Fantastic. So, from the standpoint of, the benefit that you anticipate, in addition to being able to gain access, and will that access be kind of across the board, anybody, or will it be sort of a progressive thing where some firms will adopt and others may not? What do you anticipate in terms of the market as a whole adapting to this idea and making room for it for the first time?
Well, it's funny, in our presentation, we have a pyramid, and at the top of the pyramid are the top five firms who represent 80% of the underwriting business.
Mhm.
And then below that, you have about 3,200 broker dealers, which
Mhm.
has about 650,000 financial advisors who are affiliated with these broker dealers. And below that, you have the
Mhm.
registered investment advisor, RIA community. That's another 15,000 plus RIAs collectively, who have about 68 million customers and I think about 140 trillion of assets. And all of those folks, those registered investment advisors and these broker dealers, for all intents and purposes, are shut out of this process because there's no way for them to participate and really break through the cabal, if you want to call that top tier. So back to your
Mhm.
question, we want to use the broker dealer community to do their job, which is determine suitability, know the customer.
Mhm.
Now with what's the regulation best interest, do what's in the best interest of
Mhm.
your client. But we feel that, quite frankly, the IPO market, just to speak about that for a minute, that is an opportunity that should be available to all investors because these are
Mhm.
publicly issued securities, they're due diligence, they're underwritten, and there's what they call underwriter liability recourse, that if there's a problem, the underwriter should have sort of determined this when they bring these companies to market. But
Mhm.
the brokers are responsible for the oversight. So we want to encourage and engage the broker
Yeah.
community, but it's every investor. So it's retail and institutional. We're agnostic to that, but it's all the other investors, the 95% of the market, that's shut out of this process.
So do you anticipate any pushback at all from the regulators in terms of the very thing you just mentioned, suitability, and how do you control that so that everybody doesn't just jump into a pool? Because IPOs aren't a guarantee of, actually making money, and they can be speculative depending upon the company. So will there be any kind of assessment process that you will be thinking of providing, or will you just sort of leave that to the individual brokers and the broker dealers?
Well, just a step back. So we're really not changing how the underwriting process works as far as picking an underwriter, say a lead manager,
Mm-hmm.
that then helps to draft the prospectus, files it with the SEC and with the company, and goes through review, and then begins to market the offering.
Mm-hmm.
All that's the same. But we're bringing all these other brokers to the party. And the way we're doing it is we are, from a regulatory standpoint, fully compliant. So we've had to go through the SEC
Mm-hmm.
to get approval with the SEC, which actually embraces what we're doing because we hit all three
Good.
mission statements of the SEC. One is investor protection. So we're engaging with the broker community to do their job, which is the investor oversight.
Sure.
Two is fair, orderly, and efficient markets. The second mission statement. We mitigate that aftermarket volatility. You want to have a bit of a pop. So today, 30 to 40% is the
Yeah.
average pop that you see. Well, investors aren't able to capture that pop because they have to go into the secondary market and buy at a higher price. And
Right.
I can tell you across the
Right.
board, if you go to our website and you look at the IPO data hub, we have a report card on these IPOs, SpaceX being, the most recent one, where that was,
Right.
priced at 135, opens at 150, closes at 160, traded as high as 175, but it was up 20% of the day. Cerberus, which was one that was up, like 89%. And so that pop, if you
Yeah.
will, is something that the investors are having to pay for. They're having to come in the secondary market.
That's
So
right.
second mission statement is fair, orderly, and efficient markets, mitigate the volatility. And the third mission statement of the SEC is facilitating capital formation, helping more companies raise capital. So the regulators love what we're doing. And then we're also a broker dealer with FINRA because of our revenue model and how we get a success fee. So from a compliance
Okay.
standpoint, we are actually, just to your point here, we're engaging the broker community to enable them to have reasons for client engagement and actually do their job better.
Okay. So, you know, from the beginning, because you've been trying to develop ClearingBid for how long now? And I know you've also been in the process of raising capital and you've been doing fairly well at that. How has your vision changed, or has it?
Uh, Truth be known, I mean, our first patent that we filed was back in 2014. So, that's 12 years ago. And this is tough to change Wall Street. I walked into a meeting with one of the NASDAQ folks and said, geez, you've been at this a long time, man. And I said, yeah, it's hard to change Wall Street because there's a lot of pushback. And the
Yeah.
pushback is
Yeah.
really one of a misperception because everybody thinks the big guys aren't going to let this happen. And in reality, Yeah, the big guys, the big underwriters, they lose some control over being able to allocate securities to the institutions of their choice. That discretion is
Hmm.
discriminatory, it's highly exclusionary, and it really does constrain capital formation because it limits tapping the rest of the market. So that's really a perception issue that we've got to work around. I can talk about how we do that and why I believe everybody will embrace this, but the big firms will be the last to embrace it. But today, it's really a function of just leveraging what's already out there and doing it in a more ubiquitous, transparent way. And we do that by basically providing the same information to everybody at the same time, because what our portal has is the
Hmm.
real-time price and demand as an order book is building, and then ultimately when it gets priced. And issues are always priced a little below an IPO price where you think they're going to trade in the aftermarket. You want that to trade up, but you don't want it to double. But if it goes up, 10 or
Right.
20%, that's good for everybody.
Hmm. Excellent. So we've talked a little bit about this, but I'm just curious because I was acquainted with Bill Hambrecht at the same time that he was establishing Open IPO, which is one of the only other uh, concepts similar to this that I have been aware of in my lifetime anyway. How do you feel like your clearing bid concept and way of being will be different than his because he had some success, but not the degree that he would have liked? And I'm just curious what how you would see or distinguish yourself from what Open IPO attempted.
Yeah, that's a great question. That's one of the comparisons that where I was asked
Hmm.
about. And I've gotten to know Bill over the years well. I really have a lot of respect for him.
He's a nice guy. Yeah, really smart guy.
Super, super, super guy. And he did a lot I think, for the industry. But to your question, back in 2004, I think it was when Google went public, and Sergey and Larry wanted to do an auction. Bill was the logical party because Open IPO had already done auction IPOs for, I think, Ravenswood and Pete's Coffee and a couple consumer-facing companies, which actually it works well with because you really want your consumers to
Mhm.
be able to buy shares in your company because they know and love the brand and they want to be able to participate. So that was a good concept.
Sure.
But the Google transaction was a bit contentious because I think it was Credit Suisse and Morgan Stanley were ended up being the co-managers on that. And Bill
Hmm.
had filed this patent to do the open IPO and kind of muscled his way in, threatened to litigate them if they for patent infringement if they didn't include them. But they didn't include that particular technology. They developed their own auction platform, and the auction was challenged because with Bill's technology basically was predicated upon a Dutch auction. And a Dutch auction,
Yeah.
just briefly, is you try to figure out what's the highest price that you can get to sell all the shares. It came the 1630s when the Dutch were selling tulips, and what's the highest
Tulips.
price I can
Yeah.
sell all my tulips in my cart. Now the problem with that is that it's either you're going to sell it at the top price, and there's only going to be downward pressure because there's no more demand, or you have to cut everybody back pro rata. So what Bill had was the limitation of having to give everybody the same amount if there was some additional demand. And what happened? Everybody kind of waited till the end to come in because they didn't want to show their hand and
Okay.
have this quote unquote price talk. Fidelity didn't want to come in until later to see how that order book was building. So we've engineered around that
Hmm.
by incentivizing people to come in early, which I could talk about. But that was one of the problems that Bill had was how do you get people to show their hand early and not come in the final stages?
Right.
Then the other issue was Bill was
Boy, and that's a
competing.
big deal.
Yeah, that
Yeah.
was just fundamentally a structural issue. And then Bill was competing. He was out there putting his name on the cover of the prospectus, and he was compressing the gross spreads. He was going out and saying, "Look, I'll underwrite this offering for a lower placement fee, a lower gross spread than what the
Mhm.
other underwriters are willing to do." And the combination of those really kind of handicapped him because in the end, he
Mhm.
shared with me, the underwriter said, "Look, we're never going to let you, make it." Because they didn't like it. They didn't like losing control. But I think we have a different market
Yeah.
environment now that's distinctly changed from what the case was back in those early 2000s.
So, how do you plan to incentivize this to avoid that very problem yourselves?
Well, we're really in the same camp that the underwriters are because we get paid based
Mm.
upon the amount of the gross proceeds raised. So we're separate. We get a transaction fee that's based upon how much capital is raised Typically, it runs about
Okay.
50 to 100 basis points. The underwriting fee, we believe, is sacrosanct. So what we do with that is we reallocate how that gross spread is paid. So today, not getting too complicated, but today the
Hmm.
manager has part of that fee, the lead manager, and then most of the
Okay.
selling concession, which is the commission on the IPO trade, most of those are being paid to the lead manager because the lead manager is determining which institutions are going to get the allocation. So those institutions are going to designate the lead manager to get the order and give them the commission. It's all quid pro quo. This is fundamentally why the business is the way it is, and everybody else is excluded. So what
Right.
we're doing is we're reallocating the economics so that the lead manager still gets a hefty fee, but every single broker that puts an order in that has that order filled, and every order that is in the money. In other words, if the investor puts an order in at a price, a limit price that's at the IPO price or higher, that's an in the money
Okay.
order, and that in the money order is guaranteed an allocation.
Okay.
So every broker is incentivized to put orders in on behalf of their clients and vet the
Right.
authenticity and make sure it's in the client's interest, and they're getting paid the commission, and that commission's an incentive. So we're really kind of saying, hey, look, we don't want to fool with the economics, but we want to redistribute them so that everybody is incentivized. No one's really disadvantaged, but everybody can have that access and the inclusion, which is today, no one works the trade because they don't have any way to participate.
Yeah. So because the big companies, institutional investors are not getting allocation the way the traditional market runs, the incentive is if you come to the table too late, you're just going to miss out because the allocations will be given according to the orders, and then that's it, right?
Well, with our case, talk about the institutions real quick. So the institutions actually are advantaged because they can come in and say if they really like and want to be in a particular offering, a particular name, they are going to put more, market-based bids in, and they can ladder their bids. In other words, they can do different prices
Okay.
and they can stagger their bids. And the stagger bids concept comes back to your question. So what we do is we timestamp the orders and we put them into priority
Okay.
groups. The earlier priority groups are coming in earlier. You're guaranteed a higher allocation if your order's in the money. So this way, we're building that
Okay.
price discovery, which we display publicly on our website. If you come in on the last day, say three priority groups, the last day is priority group three. Priority group two is the day before, and priority group one is earlier. If you come in the last day, as long as your order's in the money, you're still getting filled, but you're going to get a lower allocation because you came in later. So what
I
again,
see.
you might get an 80% allocation if you come in priority group one, you might get a 65% allocation in priority group two. And if you come in the last day, maybe it's a 45 or 50% allocation. And someone says, well, why do I want a 50% allocation? Well, the answer is you don't get anything today. You don't know what the price is going to be, and you're not guaranteed
Right.
any allocation. I mean, in like SpaceX, we had people put a 25 share order in for SpaceX and Robinhood, and they got one share. Now, they was lucky they got one share. Most people got cut out. So we're saying, look, everybody
Yeah.
has a level playing field, and the institutions are even more incentivized because they know that they can put the time and effort behind a particular analysis and know they're going to get filled.
So what's to prevent like one or two major institutional investors just come and buy up the entire allocation and cherry pick it with their people the way they always do?
Well, that can be the case, but what you don't want to have is a high concentration of a single owner that then, in theory, controls a big block. And if they decide to sell, then all of a sudden, you have a lot of selling pressure.
Yeah.
So, as a practical matter, depending upon the size of the deal, you probably don't want any one institution to represent more than 5 or 10% of the order book. Now, you can have
Okay.
somebody
So you're
like,
putting those caps in there? Are you
yeah,
putting those caps in there? Okay. Well,
yeah, we'll
that's
put
nice
some
to know because
limitations.
otherwise, okay, good. I could just see it now, just going, oh, we'll just do it the way we normally do by buying it all up, and there you go. It's the same old story, right?
Well, by the way, this is for equities because you do want secondary market
Right.
trading and you
I
want some
understand.
liquidity. With the bond market, you could have one single buyer buy the whole issue as
Sure.
long as it's a competitive bid and they're willing to pay a price that results in a low
Sure.
coupon or low interest rate.
Yeah. Yeah. I understand. Very interesting. So, are there going to be any minimums in terms of just the retail investor, like in terms of their capacity to get in and buy shares themselves?
No, the only real limitation is working through your broker who may say, "Hey, I don't think this is appropriate for you, Deborah, because we really didn't talk about putting you into high growth stocks that's higher volatility and higher risk." Because I like
I
to say
see.
widows and orphans can buy IPOs if it's suitable. But we'll
Sure.
probably want to focus on round lots, which is 100 shares or more. But you might go down to 10 shares. I mean, you can basically
Okay.
cut it to whatever you want. We do have what's called preferential bids. These are earlier bidders that come in who will get 100% fill to get up to a certain level where we have to meet the minimum standard for what the exchange listing requirements are. In other words, you typically need about
Yeah.
350 or more investors. So we're going to give some preferential to those early investors, which will be retail investors. But typically it's going to be a round lot, but it could be, one share, 10 shares, whatever the issuer
Hmm.
and the underwriter decide is acceptable.
So, when you think about your ultimate plan, I would be curious to know later on down the line, do you anticipate that there would be a company, institutional investment company, et cetera, that might want to come in and just buy you out in order to get rid of you because you're now getting into their profits? Do you anticipate, is that possible? And how would you feel if somebody came in and just wanted to do a takeover?
Well, we have 10 patents on what we have now. We have three allowances pending, which means we're going to have three more. So we're going to have 13 patents, and we
Hmm.
got four more in the pipeline. So it's a pretty good position from a defensible standpoint. Not that patents mean a lot, but it's tough to get patents in this stuff. So that's a bit of a barrier. But I think we don't want to
Hmm.
end up having someone come in and shelve us. I'm pretty
Yeah.
adamant about making sure that this proliferates and that we have an impact on the industry and investors for everyone's benefit. So there's a number of parties that I think are logical acquirers. I mean, certainly it could be an exchange. It could be
Hmm.
a news or data provider. It could be a consortium of broker dealers that come
Yeah.
in. We could potentially do an IPO ourselves on our own company with the platform. So my intent, I am looking at, if I could, if have my wish here, is have a strong partner that can be a formidable partner to help move this a little quicker. Because the sooner we're to market, the better.
Beautiful.
Because it's all, it's revenue based at the end of the day. And what we are doing is we're going to focus on the IPO market first, where there's these inefficiencies, and then move into the debt market, which is a much bigger market. But in the
Hmm.
end, the pushback is significant. So I don't think anyone's going to acquire us to put us on the shelf because we're cannibalizing their business. I think that's going to be difficult, but I think
Good.
there will be some sufficient challenges until we can proof a concept. But I believe this is a better solution than certainly the traditional book built method, which is exclusionary, direct listings,
Yeah.
which are not proven to be that efficient, SPACs, which is I think a big money grab, and at the end of the day, this is an alternative, and I think it's probably the most viable one when push comes to shove. When you look at kind of what we do and how we do it for everybody.
Hmm. Hmm. So, would your ultimate goal and hope be that you do actually have your own IPO at some point in the future? Would that
I
be
don't know,
the
I
best of
mean,
all outcomes?
yeah, I think for my stakeholders, I want to make sure that the total returns are there. So what we are looking at is kind of a ramp this year. We get our first couple deals done by the end of the year. We're redoing our back end to facilitate greater scalability and reliability. But over time, as we ramp up, we are like a toll booth. We get a transaction fee
Mhm.
each one, and so I'll be able to dividend out some of those monies, or maybe we do a recapitalization. But we could do a public offering on us because we could do our own public offering theory. But
Yeah.
I don't know that we'd have to go out and raise a bunch of capital, but it would be a way to monetize the entity and then have a currency to go out and do other deals, and then people can effectively, have a security that they could sell. Because eventually everybody wants to have liquidity from their investments. That's a given.
Yeah. Absolutely. So, from the standpoint of where you are right now and what you need in terms of moving this forward, I know you've had different investment opportunities for people to become an investor, suitable investors involved in taking this to market for you. Where are you now, and what are the needs in order to really move this forward as fully as you would like?
We've raised about 13 million to date. A little over 2 years ago, we did a crowdfunding, and we raised 5 million, which was the limit under Reg CF to do a crowdfunding. And fortunately, we ended up selling that out in about 2 weeks. We had a fellow that published a research
Fantastic.
piece that supported it, and that really created the awareness. And we had 3,600 investors come in. And I tell you, these are my peeps. I love posting and
Wow.
communicating with these people because they're evangelists for us. And so that was a raise we did. And then we did another private placement with our existing investors. And then we did another crowdfunding about 3 months ago. And we were limited to how much
Mm,
we could raise because unless we went back and did a gap audit and this other stuff. So we raised only
yeah.
618,000, but we brought in another roughly 400 investors and we've got another 1,000 followers. So we've got a pretty good book of existing investors. But right now we've got a Reg D private placement. We're looking to round out the balance of 3 million of a 5 million raise. The 2 million already came in from our existing investors. And I think that will be necessary and helpful to make sure we have enough running room so we get to market by the end of this year and then go from there. We're using the proceeds right now to redo this back end I mentioned so that we have greater scalability because, literally the ability to do like a SpaceX transaction. The big challenge here for us is this capacity to take in a large number of orders, which we're doing over the existing rails of how the secondary market works, the same way
Hmm.
I can talk about
Hmm.
it. But two, we have to have that capacity to manage a lot of cancellations if something happens
Right.
at the end. The analogy is we're like a stadium. 95% of the time it's empty, 5% of the time it's game time. And we're on for this capacity. So we have to have the scale and we have to have the connectivity so that, it's a seamless order pathway
Hmm.
that we're using. And so we're redoing that right now, and this is what part of this proceeds are being used for.
So that's really just more of the technological enhancements that you need in order to guarantee that the markets are moving the way that they should be, and you can cancel orders as needed, et cetera. Is that correct? It's strictly a technology enhancement or revamp?
Yeah, because we actually built, tested, deployed. We had full
Okay.
regulatory approval. We were ready to go. We had our first filing last year to go public, and then the underwriter pulled it because of the market volatility and uncertainty.
Yeah.
So we had that capacity, but what we did realize is that to really get the buy-in from all these brokerage firms, they use these order management service providers that they conduct their orders through, and each one of them, have their own kind of view of the world. So we wanted to pick somebody who is already pre-approved, pre-certified, and has this capacity because we're really building on top of an existing exchange technology with all our intellectual
Hmm.
knowledge. And
Hmm.
so this group, Rapid Addition, that's over in the UK, they've been a great partner and they're legit. In fact, they rebuilt the whole clearing and infrastructure business for Wedbush Securities, which serves as our clearing broker too. So we wanted something that had a household
Wow.
name that Wall Street has the goodwill and reputation behind them.
Wow, that's fantastic. So what is it that you need now? What's next for you? And are you going to be doing any more crowdfunding? What is it that you feel like you need most now to really make this thing happen, other than, further developing the technology to ensure the orderly markets, et cetera?
Yeah, I'd say now it's all about execution. So two things:
Okay.
we want to finish off this 3 million that is has to be done with accredited investors. We'll probably go back to market next year with another raise, with an institutional raise, because everything's practically been friends and family in the
Right.
crowdfunding to date. But then the other push right now is identifying and pursuing issuer mandates, companies that want to use the platform. So we've got a handful of
Okay.
companies right now that we're engaged with. They're consumer facing, where they have affinity in consumers that would probably like to buy shares in the company, and we're helping to kind of frame that whole story. But our proof of concept, which will be our first transaction again once we get
Mhm.
back in the market, is probably going to be a 50 million plus or minus deal, and a couple behind that. But we're planning to do 3 deals this year by the end of the year, and then I think our plan, and this is on the WeFunder website, but I think 14 deals next year, and then we kind of ramp from that on.
Wow, that's fantastic. I'd be really interested in knowing when you're getting close to any of those IPOs going to let me know about it because I can always put out, we can put something here. And also, I think it's a good idea for everybody to know how they can reach you if they're interested in more in what you're doing in any way, either as a consumer, retail investor, and or from an investment standpoint. So why don't you share a little bit more about how people can learn more about you and ClearingBid so that we can get that word out as well.
Oh, thanks, Deborah. Well, our website, clearingbid.com, is a good tutorial website. In fact, we have a tutorial video on there that's pretty good. It
Oh,
describes how
fantastic.
the process works and everything. So that's a good starting point. I'd also maybe look at the what we call the Knowledge Hub, and a subset there is the IPO Data Hub, where we've got report cards on all these IPOs that are being done and how atrociously underpriced or inefficiently they're done. My email is matt@clearingbid.com. And I'm very, accessible. I've got the 4,000 investors or so with our crowdfunding that we engage with off WeFunder was the platform, but now we go direct out to everybody. But we really want to remain accessible
Yeah.
and a resource here because what I really want to take this is it's a data play. Right now, it's a transaction fee based, but over time, we gather information on what I call where the fish are biting and what those investor preferences are and the investor interests and the brokers they work with and the kinds of investments they make. And then as we gather statistics on how these pricings have worked and everything else, this is going to
Hmm.
be an invaluable tool to better execute for issuers, better for investors. From a regulatory
Hmm.
standpoint, they like it. And we're all about kind of access, but we've trademarked equal opportunity investing for that context. But I also trademarked securities as a service, ClearingBit SaaS. And there's a larger opportunity here to really have an impact. So I welcome the interest and would love to if someone's looking for ways, and certainly also we're looking for issuer mandates because the first to move are going to be the Mavericks that'll be willing to break stride a little
Absolutely.
bit here. But I think once we get our first couple deals under our belt, that's the proof will be in the pudding.
So, at a personal level, right? I mean, I know that you have worked really hard to bring this forward, right?
Yeah.
What what is it for you in the end? What's going to be the moment that you'll experience um, whatever it was that internally you set out to do? What is your hope for yourself in all of this?
Well, I got a list I'm keeping for who's going to be there when I ring the bell.
Yeah.
And one of my dear friends who passed away, Shelley Shear, he was a broker's broker. He was the one that really showed me the business when I was a broker at Merrill Lynch. And unfortunately, some people I'm going to lose, but that'll be a seminal moment for me. But I really want to make a difference in people's lives. We've I mean, one of the areas that I think is extraordinary opportunity is in the home affordability area and the ability to come up
Hmm.
with got some pretty, just creative ways to maybe expand in the manufactured housing area where people can't, afford a home or the property it sits on, but they want a community of like kind where people are safe and interact and stuff. And so the ability to, for example, take the conforming mortgage treatment that Freddie and Fannie have to the manufactured housing industry, which isn't the case now. This is something that Senator
Yeah.
Chris Dodd's helping us out with too. This is going to make a difference in the ability to package up those securities and then sell them and raise more capital and create more affordable financing alternatives. I mean, I want to have an impact here. And so fortunately, over the years, I've had great experience in all facets of every asset class, of every part of investment banking. I've been across the table from the best and brightest. The financial restructuring business I spent time in was probably the best training ground for me. But I can take these skills and we can push an agenda of really doing well, do good, and have an impact and have the fortitude to do it. So it's going to be a lot of fun, but the breakthrough is going to be getting through this year. We've been using the SpaceX
Hmm.
IPO as a good case study because we can go through and explain what we do, how we do it, how it would have been different. And the wow factor is
Yeah.
pretty significant there because now people it's starting to resonate. Okay, the time has come and now it's we have some wind in our backs, whereas a year or two ago, there weren't IPOs and we were really fighting fighting some headwinds.
Yeah. It's interesting you should just mention that the real estate thing and the affordable housing, because really in this country, the greatest tragedy has been that the two opportunities for people to actually create wealth have become almost impossible now.
Yeah.
Real estate market's too hard, too difficult, too expensive. Many people, our children included, may never be able to own property because it's just impossible now. Cost of living keeps going up. Real estate doesn't show any sign of dropping. I mean, I think it will eventually. But, between that and the investment market, IPOs and opportunities like that, people are just having very limited potential in two of the greatest areas that wealth has been created historically for Americans from the beginning of our democracy, right? So I'm so excited to hear you talk about that, because it is something that actually really I find heartbreaking, just to see how difficult it is for people to create wealth and even just to not even create wealth, but just have an affordable lifestyle, and housing has been one of the big reasons why it's not possible. So good for you for thinking about that.
Yeah, the one of the company I co-founded here, Equify, which is a shared equity mortgage structure, and it wasn't usurious and it was actually really affordable, but they've had a tough time really getting and raising the capital that they need. And it's unfortunate because had we been out there, we could have helped them do it. But it's a real affinity for me, because I think back to your point, this is where people build wealth, as home ownership in the market, certainly, and ways to creatively, allow for people to have access to that is going to be a challenge, but I think it's also an opportunity.
Absolutely. Well, very, very exciting. So I would just like to say how wonderful it is to be able to spend some time with you to learn more about ClearingBid. Is there anything that you would like to add or say before we end this podcast today? I want to make sure that I give you plenty of opportunity to share anything that you find that you think will be useful.
Thanks, Deborah. It was great to spend time with you here. I think, at the end, I call it reverse inquiry. If the folks here who have interest, first of all, go to our website and learn a little bit about it, and then start asking questions with your brokers, because that pressure point
Yeah.
of the investor saying, hey, look, we want to access IPOs. We understand we're going to be able to get it. It's a conversation I had with Morgan Stanley, who has 18,000 brokers, and it was a fairly top level person. And they said, we don't need it. And I said, well, yeah, you don't need it, but your 18,000 brokers don't have access to your own deals. And
That's
eventually
right.
this is going
That's
to
right.
really create the opportunity for more pressure. And we've already had some feedback from folks that have said, well, don't be pushing our brokers to be pushing us. And it's like, well, look, it's coming. And so this is my
Yeah.
peeps of the brokers, and I want to facilitate the investor community. And I'm agnostic, retail or institutional, but the Robin Hoods of the world,
Right.
and all this, they're changing the landscape, and it's coming, and we're out in front of it. I don't see anybody who's going to touch us, quite frankly.
Well, that's good to know. That's really exciting. So thank you so much, Matt, for spending your time and sharing your knowledge and your wisdom with us. Wish you the best of luck. Everyone, please go online and look at clearingbid.com. Matt, as he said, is very accessible. And as you can tell, he's very passionate about what he's doing. And hopefully more people will gain access to opportunities in the IPO market. And then also more deals will be made and be potentially out there that might not have been made otherwise. So thank you, Matt, so much. Really appreciate your time.
Thank you, Deborah. Thank you so much. Bye-bye.
All right. Take care. Thank you.